Well, let's look at that macro picture. I mean, rates decision out of the MPC yesterday coming in pretty much as the markets had anticipated, holding steady at 6%. A prudent move in your books?
Hello, Alishia. Good morning, and thanks for having me. As you've indicated, Nigeria's Monetary Policy Committee of the Central Bank yesterday decided to keep the interest rate, the country's benchmark interest rate at 6%, while maintaining the corridor interest rate of plus or minus 200 basis points for lending and deposit rates, respectively. We thought this move was not came as no surprise to us. Obviously, Sanusi had indicated at some point that he didn't feel that rate cuts was necessary. And so we felt the same way, that rate cuts were not necessary, particularly after having injected approximately 420 billion naira into the banking system so that they could shore up their capital. Also, we think to some extent the early decision of the central bank to guarantee specific volumes of interbank loans went a long way as far as ensuring stability and enhancing liquidity in the interbank market. Subsequently, you've seen interbank lending rates drop quite significantly. Core lending rates have dropped by as much as 1,800 basis points since the high of about 22.9% was recorded within the last 3 months. And so we think Sanusi has accomplished that, and we think that was a prudent move.
Well, some have been highlighting that the governor has taken a bit of the eye off inflation for now, focusing more on growth, and arguing that decisions being taken on these lines on the basis that inflation is no longer a major threat in the economy could be dangerous, considering that there are still pretty big question marks around the composition of the inflation basket. Do you agree at all with that kind of sentiment?
Well, I think globally everyone can agree that we're in a recession. And the traditional monetary policy backed by central bank governors when we're in a recession is an expansionary monetary policy. And so we've seen in other countries, not just Nigeria, the central bank governors stepping in to inject some form of liquidity into those economies. And so in Nigeria, I think inflation for the most part has largely been as a result of instability in the FX. I think for the most part, a lot of the inflation in Nigeria could have been attributed to uncertainty about the exchange rate. And to some extent, the stability that has come into the FX market has led to, in our view, a controlled inflationary regime. But we understand the concerns, and as far as the index is concerned, how inflation is calculated, majority of it is composed of food. Food forms a majority of the calculation that goes into the CPI, the Consumer Price Index. And going towards the end of the year, it's expected that the harvest from agriculture would significantly help to be able to keep prices low. And so I think the inflationary concerns are not as significant as it is growth.
The central bank also made the announcement in principle of an asset purchase facility fund. Explain what that fund is exactly and discuss the possible modalities under which a fund like this would work effectively over in Nigeria.
Yes, Alishia, yesterday that was one of the interesting developments coming out of the Monetary Policy Committee meeting. The central bank announced in principle the approval of an asset purchase facility fund. Basically, this would be a fund that, in our best understanding, will be set up in order to help absorb some of the toxic debt on the balance sheets of banks. And so I think it's a very interesting development in the sense that this was one thing that, if I can recall, Sanusi was not initially in favor of, because I think under the Soludo era, the same proposition had been presented to Yadwa, and we never really had much of it up until Soludo's exit. And so the approval, I think a couple of different modalities are apparently being discussed, but one way in which we could see this being effectively carried out is if there could be some kind of private committee that the central bank could lend to, some sort of private investor community, similar to what we've seen in the US, where top funds were given to private investors to be able to invest in some of these asset classes that did not have any liquidity, like mortgage-backed securities. And so we don't think that the central bank here in Nigeria needs to actively go out and buy, the toxic debt off the balance sheet of these banks, because one of the issues that might come into question is how do you actually appropriately value these assets? Are you going to pay market value, or are you going to pay the book value? And so we think that some sort of investment or some sort of care needs to be taken in making sure that you enlist the right sort of private investor community that can better value these assets and better, help these banks take some of these debt off their books.
Well, certainly the central bank has been in the spotlight over the past couple of weeks. Its role most specifically, and the role it plays in the Nigerian economy. Do you get a sense that that role has shifted now from monetary policy and managing things in that arena towards the banking sector? Or are you getting a sense that they're managing the two at the same time effectively enough?
I think that's a very interesting question, Alicia, in the sense that we actually don't see monetary policy. We don't think monetary policy is unique or independent of the sort of reforms that we're seeing in the banking sector. And I think in order to be able to actually put some of the steps that Sanusi is taking right now in context, people need to understand what the definition of monetary policy is. I mean, monetary policy is the process by which government or the monetary authority of a country, basically supplies credit to the economy, makes sure that there's credit available, and determines the cost of that credit. Now, in Nigeria, you have a situation where the credit mechanism in Nigeria was actually broken due to a number of missteps that has come to the fore. And so, despite the central bank cutting interest rates, significantly from December 2008, cutting from approximately 10 to now, where it stands at 6%, banks were still not able to be able to supply credit in the economy. Interbank rates went as high as 24% over the last year. And so in order to be able to address those issues, the central bank needed to tackle the banking sector head on.
Of course, so because the cleanup in that sector is pivotal to economic growth, as you've highlighted.